This is the FM Gold channel of All India Radio. In the program News Analysis, now we bring you a dialogue on RBI eases gold import norms. The participants are Professor Yamini Agarwal, Indian Institute of Finance, and Professor Shivaji Sarkar, Economic Analyst.
Ms. Agarwal, yesterday the RBI announced scrapping of the 2080 gold import scheme. Now, of course, gold for quite some time has been a debated issue, whether we should import gold, whether we should keep a check on it, whether we should, as in this particular case, whether we should import and again export 20% of it or not. So there are various dimensions of the gold import and the gold business that we are seeing for the last few years in this country, and it has become especially a problem as current account deficit is also increasing from time to time. Now, with this scenario, the way RBI has scrapped this 20% re-exporting of the imported gold, how would you explain this?
I think it's a very good move the government has actually decided to work on, which is about scrapping the scheme of exporting 20% of the gold which has been imported. It's primarily attempted at bringing about corrections of the current account deficits which are there, because the current account deficits in September, October and November have been soaring, primarily because of the large amount of gold imports. It has been estimated that the gold imports have been over 100 tons in September and in October, and it is expected that in November, if you look at the estimates, there will be over 150 tons or so. So to avoid that kind of a condition where the imports of gold is taking place and is causing a high amount of deficits in the current account, they have tried to scrap this particular scheme. They've also tried to see that the prices of the gold continues to remain largely stable, especially when the season of weddings is coming, when there has been festivity in the market, and there is reason to believe that the gold purchases will continue because of large number of high-profile weddings also taking place.
What exactly is the 20% re-exporting? How it is to be worked out, or how it was being worked out?
It was actually a scheme which was launched last year in July-August 2013. Again, it was attempting to curb the gold imports. It was also attempting at bringing about corrections in the current account deficits. The scheme was that whatever you were actually importing, at least 20% of that was to be re-exported so that we could earn foreign exchange from the export of the gold, because a lot of foreign exchange was being used for the imports of the gold. So this scheme actually attempts at removing the imperfections that it was trying to create by way of, let's say, having a parallel market being established through the smuggling mode or the other mode. If you also look at gold imports, for the first time there was also, or let's say not for the first time, but there was a gold import duty which was also levied of about 10%, primarily to curb the gold imports, again attempting at managing the balance of payments affairs. The balance of payments indicated that the current account deficits in April and June last year 2013 were about 4.9%. Consecutive 6 months later, they came down to about 1.7% of the GDP or so in April and June, as the estimates indicate. But later on, if you look at the current account deficits, because of the gold imports, they have been rising.
It has been debated a lot that initially, once this 2080 scheme was introduced, we saw that there was a slowing down in imports. But again, it went on increasing and increasing. And in the recent, just before it was scrapped, it was feared, especially by the gold industry, that possibly more curbs would be imposed. And still now, the way actually we're importing gold, we do not see any respite from the particular crisis of current account deficit. In such situation, what was the need to virtually scrap it?
If you look at the gold markets today, the consumer demand for the gold is arising primarily because of the cultural reasons in India. India consumes about 800 to 950 tons of gold on an average, and as a matter of fact, we have quite a requirement for gold on a monthly basis, which is indicated by the overall imports that we make. If this particular scheme was there in existence, it was only trying to curb the amount of imports we were doing in the gold and to allow the prices to be maintained in a fashion that does not allow too much of consumption of gold. Why? Because when we look at savings, Indians per se majorly consume or their savings in the form of either spending on their houses or spending on commodities like gold, silver and others, or maintaining, let's say, fixed balances in the banks, which is a less risky assets which we may consider. Now, gold spending in most economies by macroeconomic parameters is considered to be unproductive. But when we look at our cultural parameters or when we look at our socio-economic structures, we have a lot of spending on gold, whether it is in the form of jewelry, whether it is in the form of gold biscuits whether it is form of others. Gold also as a metal has a lot of benefits in terms of capital appreciation.
But there is one thing, particularly when it is about this particular scheme, it is said that it was hurting some of the big gold companies, and that was to reduce whatever their losses or the difficulties that they were having. And this scheme has been basically scrapped out, so that those companies can have some benefit.
Actually, that would be wrong to say, because the benefit does not come to a particular group of companies. There are news items which do talk about hoarding of gold right now by a few group of companies trying to increase the prices of gold, because it has been observed that the gold prices lately have been slowing down. They are not on a rise. And it has been also observed that the gold markets or the consumer demand in the gold markets is not primarily because they're wanting gold out of their needs, but they're purchasing gold because right now gold is on a cheaper stance. It's believed that there are a group of companies which have been somewhere or the other reported, about 6 companies which have about 40% share in the gold market. They are trying to hoard gold so that the price...
They were also allowed in last May to import gold, almost at the height of the election.
This scheme actually was there for anybody who was importing gold. So it is not a scheme which is there for a specific group of companies. And this scheme...
These particular 6 companies were especially allowed gold imports, and that is where some murmurs are also there, whether they should have been allowed or not. But anyway, whatever way it is being done, last year we imported about 825 tons of gold. So basically the imports are really not coming down. And such a scenario, despite the fact now we have almost 10% duty on imports of gold.
The government is trying to here bring about a curb the establishment of other informal channels for transfer of gold. When you put a restriction, whether it is import duty or whether it is a scheme like 80:20 or any other restriction or imports or any other transaction, there are always chances of establishment of other channels which are informal or illegal channels. It was observed by the government that when they were actually not permitting gold through the usual schemes, or they're putting taxes on them or they're putting tariffs on them, the smuggling of the gold is actually at a larger pace. And there are different means which are being adopted, let's say human mules as you may call them, or smuggling through cows or through animals or through other means has been going on. And they want to put a ban or they want to stop that smuggling, because once that activity picks up, it is very difficult to reduce down illegal activities. So when such schemes are scrapped, they are somewhere or the other an attempt to reduce down or cut down those informal channels that exist. Also, they are trying to see that the gold prices, they have observed that, when you talk about gold imports, they are not reducing by any means. It's not that our incomes have suddenly increased, but there is a certain amount of feel-good factor which is there into the market, with a GDP growth rate estimated at about 6.5%. There is also an estimation that, people are going to do well in the next coming year with the way people look at the foreign policy, with the way people look at the domestic economy growing. So gold is likely to be one of the investment avenues for most of the people.
See that gold prices are also coming down, and it is expected that the scrapping of this 2080 scheme may further lower the prices of gold. In such a situation, is it really prudent decision to invest in gold?
Whether it is a prudent decision or not, here we are not debating the decision whether you invest in gold or not. Here we are debating the decision whether the government is working in favor of the traders as well as of the consumers. The moment it scraps the scheme, obviously the prices, there will be more supply available and there is less likelihood for the prices to go rise. Because if you have a requirement for imports, and let's say you're importing about 100 tons and you're importing about 150 tons, if you have this scheme going on, a certain percentage is going to go abroad. It's not going to stay as a supply in your economy. And if it does not stay as a supply in your economy, there are likely to be shortages of the gold demand when there is gold demand, especially coming from the wedding season or other reasons. So automatically the government does not want the prices to rise. That is why the scrapping of the scheme would be able to maintain the prices at that particular level. And as a matter of fact, for investment purposes, I believe most people understand that one must buy a particular item if it is required at a time when it are lower prices and then sell them off or use them when there are higher prices. So it is actually very good for people to buy. So it is likely to create more demand, and it is likely to give a certain amount of impetus to the traders who are facing a lot of problems in, let's say, creating a sufficient amount of demand in the gold markets today.
We have also seen possibly what you are saying because of those reasons that gold imports during the last 5 years jumped to almost 280% and the total almost of over $4 billion. So now what we find is that we are having really almost 20,000 tons of reserves of gold in this country. Is not that retraded within the system?
If you look at macroeconomic conditions, gold has never been considered as an investment option because it doesn't really come back to the economy in the circular flows, creating economic transactions per se. So gold as an investment option is not considered to be very good. But gold, if you look at the other investment alternatives, what do you have as an investment alternative for, let's say, even individuals, forget corporates or forget the central banks who maintain a certain amount of gold reserves to back their currencies. If you even look at an individual himself, what are his investment avenues? His investment avenues are, let's say, real estate, housing. His investment avenues are going into the financial markets, investing into equity and debt. His investment avenues are investing into, let's say, metals. His investment avenues are other instruments offered by the banks, like, say, mutual funds, insurance products, or so forth. Now, what has happened in the scenario per se is that since the condition has not been very good, people have observed inflationary trends in the past. They have been investing in the real estate market. But we have observed the real estate market is highly overvalued. People don't want to invest in real estate anymore. The second or best option is gold. The gold provides them a certain amount of option, but how much gold will you buy? You have to diversify your investment. You go to financial segment. Today, the financial segment, if you look at the stock markets, which is the Bombay Stock Exchange or the National Stock Exchange, they're doing extremely well. You do have an opportunity to make gains. So people may be shifting their avenues of investment, let's say, from gold to the stock markets, and that is why possibly the prices are low, because if you look at the gold demand, it's not really coming from the real consumer. It's coming because the prices are low. People are buying today because they have certain amount of funds and they feel that probably this is the right time they should buy, and then they can probably keep it till the time it reaches at a higher level.
Now, in this kind of situation, as you're saying, we find that despite lots of activities in the Mumbai Stock Exchange or even Nifty, we do not really find that normal common investors who are there, they are going to the stock market to invest.
There are common investors and individuals who are investing, but yes, the market movements are not largely in the Indian markets determined by what retail investors think or do about it. Retail investors are always those investors who happen to benefit either from a boom phase or happen to disbenefit from a recessionary phase induced by large players into the market, especially the stock markets, which may be the foreign institutional investors, which may be the Indian institutional investors, or other big players into the market, including, let's say, the mutual funds or other players who might be investing. But it's not that the retail investor, if he finds an opportunity, he is not investing, but he needs to be a little more cautious whenever he sees quite a sudden jump which has been observed in the Bombay Stock Exchange or the other exchanges today.
There's another instrument that is called ETF, the Exchange Traded Fund for Gold. Now, how that is really doing in this kind of a market?
ETFs largely linked to gold, but then it is again an investment avenue which you're talking about. So as far as investment avenues are concerned, they're likely to do whenever there are opportunities to, let's say, whenever there are certain inflationary trends that do lead to believe that there would be a higher valuation to certain specific assets. If there are no reasons to believe that there should be a higher valuation to an asset, that particular instrument or that particular product is not likely to do well.
One thing is that because of the inflationary trend in the market, gold prices have been going up also. So that was one reason that people have been going to gold. Apart from the fact that the market was also going in ups and downs, so that was also considered a safe bet, as you have been saying. So in these kinds of scenarios, gold really has been in demand, and possibly the way the market is still functioning, it will remain in demand for some time.
Whenever there is inflation, people usually don't target financial instruments or financial savings. Like, I will not like to keep my money in the banks. I would rather make investments into real estate or in gold or in other instruments which are likely to increase in value over a period of time.
We find that gold, whatever way it remains, it will remain in demand in the Indian market, whatever the government wants to do, whatever way the current account deficit may go. For quite some time, we believe that gold prices, at whatever level they are, the demand for gold is not going to come down. Thank you so much.
Thank you so much.
You were listening to a dialogue on RBI eases gold import norms. The participants were Professor Yamini Agarwal, Indian Institute of Finance, and Professor Shivaji Sarkar, Economic Analyst. It came to you in the program News Analysis, produced and presented by the News Services Division of All India Radio. This program is also available on our website, newsonair.nic.in. You may email your opinion about this program at airnsdtalks@gmail.com.